Hey there, savvy investors. Welcome back to our channel where we help you make smarter financial decisions. Today, we're diving into a topic that could save you thousands, maybe even millions of dollars. We're talking about the top 15 investing mistakes that could be costing you big money. Whether you're a beginner or a seasoned investor, stick around because you might just uncover some game-changing insights. Let's dive in. Visual Capitalist, in collaboration with the Chartered Financial Analyst, CFA, compiled a list of common mistakes made by many investors. From vague investment goals to neglecting diversification, they shed light on crucial aspects often overlooked. These mistakes offer valuable lessons for investors who wish to achieve long-term financial success. Let's explore each point in depth in this presentation. Mistake number 1. Not having a clear investment plan. Picture this. You're on a road trip with no destination in mind. Would you know which turns to take? Probably not. Investing without a plan is like driving without a map. You need clear goals, whether it's saving for retirement, buying a home, or funding your child's education. Without a plan, you're just guessing, and that can lead to costly detours. Mistake number 2. Putting all your eggs in one basket. Diversification is the name of the game in investing. Imagine if all your money was invested in just one stock and that company hit hard times. Poof, there goes your nest egg. Spread your investments across different assets like stocks, bonds, and real estate to minimize risk. Mistake number 3. Trying to time the market. Newsflash, even the pros can't predict the market's every move. Trying to time the market is like trying to catch lightning in a bottle. Sure, you might get lucky once or twice, but over the long haul, it's a losing game. Instead, focus on time in the market rather than timing the market. Stay invested for the long term and ride out the inevitable ups and downs. Mistake number 4. Ignoring fees and expenses. Every dollar you pay in fees is a dollar that's not working for you. From management fees to trading commissions, these costs can eat into your returns over time. Do your homework and choose low-cost investment options whenever possible. Your future self will thank you. Mistake number 5. Overlooking the power of compounding. Albert Einstein called compounding the eighth wonder of the world, and for good reason. It's like planting a seed that grows into a mighty oak over time. The earlier you start investing, the more time your money has to compound. Don't underestimate the power of starting small and letting your investments grow exponentially over time. Mistake number 6. Letting emotions drive your decisions. Investing can be an emotional roller coaster, but letting fear and greed dictate your decisions is a recipe for disaster. Stay calm, stick to your plan, and tune out the noise of the market. Remember, investing is a marathon, not a sprint. Mistake number 7. Neglecting to rebalance your portfolio. Over time, your asset allocation can drift from your original targets due to market fluctuations. Rebalancing is like realigning your sails to stay on course. Regularly review your portfolio and make adjustments as needed to ensure it remains in line with your investment goals. Mistake number 8. Chasing hot tips and fads. We've all heard the stories of someone striking it rich on the latest hot stock or cryptocurrency. But for every success story, there are countless failures. Investing based on tips and fads is like gambling with your hard-earned money. Stick to a disciplined investment strategy based on research and analysis, not speculation. Mistake number 9. Underestimating the importance of patience. Rome wasn't built in a day, and neither is wealth. Building a successful investment portfolio takes time, patience, and discipline. Don't expect overnight success. Stay the course, stay patient, and trust in the power of compound returns to work its magic over time. Mistake number 10. Failing to seek professional guidance when needed. Investing can be complex, and there's no shame in seeking help when you need it. Whether it's a financial advisor, accountant, or investment coach, surround yourself with a team of experts who can help you navigate the often confusing world of finance. It's an investment in your future success. 11. Expecting excessive returns. Investors often believe that investing leads to quick and effortless profits. However, This notion is far from reality, as exemplified by cases like Madoff's Ponzi scheme, where promises of consistent 10% returns landed him in jail. Another common mistake is waiting too long to invest. Many individuals hold off on investing because they wait for market downturns to end and for prices to recover. Then, when markets are expensive, they hesitate to invest, hoping for better prices in the future. 12 No investment goals. 13. Not diversifying. Regarding the 12 and 13 goals, to have no goals and to diversify, I would say that having clear goals and diversification are fundamental in long-term financial planning. Clear goals provide a defined endpoint and a reference point to work towards. Diversification, on the other hand, proves its value when things go south, showing its importance in managing risk effectively. 14. Focusing on the short term. Another mistake is a common one, as I mentioned months ago in another analysis. Nowadays, investors typically hold on to stocks for an average of 6 months, even though historically, the best returns in the stock market have been seen over 16 years. Social media and the modern age have made us impatient and expecting instant results. However, in the markets, things don't work that way. Forgetting this fundamental principle can have serious consequences for our savings. 15. Buying high and selling low. One of the most intriguing phenomena is mistake number 15. When prices rise, people tend to buy more, even though prices are higher and the risk is greater. Conversely, when prices fall during market corrections, assets become cheaper, risk decreases, and potential returns increase. However, at this point, few investors buy, despite the favorable conditions. And there you have it, folks. The top 15 investing mistakes that could be costing you big money. Thanks for tuning in, and until next time, happy investing. Don't forget to subscribe to this channel for more on wealth, savings, finance, and investment.